Yo,
Super.
Danny. Sorry.
Yeah, thank you. Yeah, okay. There you go. Perfect. So yeah, so this year the teachers are Professor Alex and Jack Martin, right?
Yep.
Yeah. Okay. So when I did my exam, it was um Jack Martin and Alex. Last year they changed it. So I kind of adapted all the videos to like last year, and this year they really came up with something different. So I'll just show you like the difference. Like if you're actually watching my videos and you want to take a step ahead. So the difference is that for quiz one, it's lectures 1 to 3 that you have. For me, it was 1 to 4. And then here, the quiz, it was after the midterm. Now they put the quiz before, and it was the quiz two. It was lectures 6 and 9 for me. Now it's only 4 and 6 for you guys. And they also came up with a project. I have no idea what this project is. It's the first time I see this. But you guys are lucky because most people had a lot of problems with the quiz because they would get like 60, 70% because the questions were so freaking hard. It was really like even if you went to class, it was the most random questions they would throw at you. So the fact that it's only 10% helps you out. But at the same time, I remember like last semester the midterms were really they would like boost your grade because the quiz were hard. So maybe now they'll make the midterm a bit harder, or even have the questions from the quiz that were hard and they will put them in the midterm, but it's just that it will be worth less, I guess. So that's the only difference that I see. And I could tell you that when I did my quizzes for with Jack Martin and I have Professor Martin, and his questions were different than Alex. So don't try to like you could try if you want like go like if you know someone from the other class, just ask them for the questions. But I remember Professor Martin, his questions were like very like on his course, like something what he would say. But Professor Alex would be like more like general like theory questions from the slides. So yeah, do you know how many questions will be on the quizzes? So when I did mine, it was about 15 questions. It was 15 questions last year as well, but now since it's 5%, maybe it's gonna be 10 questions. I'm not too sure of the format. Okay, so I think he said 10. Yeah. So Ben says 10. So 10 would be, for 5% would be fair. And honestly, like 5% is not that much, but it's really about understanding it for your midterm, because your midterm and your final will count a lot. Good. So I'm guessing the questions are all, yeah, it should be all MCQs, but like I had like when I did it with the Jack Martin, he said like it could be like a 1 word um question. Now I remember that question. I'll let you guys know during the PowerPoints when I'll be going on that topic. So yeah, it should be 10 multiple choice questions. So let's get started. Um, what I like to do is that before we go to the theory, because like we're Sunday, I'll be like telling you a bunch of stuff, and for like 45 minutes of theory. So we'll see some questions like that are MCQs, kind of. We'll go over them. We're not going to answer them first, and then I'm going to do the theory, and then we're going to come back, and then we're going to answer them. So you could take a screenshot, or let's see, of each question and like note them, note your answer. So let me pull it out. And if there's anything, you guys could just like say it to me. You don't need to put it in the box because sometimes I don't see the chat. So if you have a question, just like you could like interrupt me. I don't mind. Okay, can you see the slides? Yeah. Yes. No. You can see the slides.
Yes.
Okay. Thank you. So you're auditing a company's December. So there's like 15 questions. Okay, so you could take a screenshot, or you could just like take a piece of paper, write question number one, and write A like completeness or clearance evaluation, or what answer you think it is. So you're auditing company's December 31st financial statements while auditing the client's Error at that date, you examine your client's bank records for Jan 2023 to determine whether the balance at year-end have been collected. So completeness, occurrence, valuation, rights and obligations are cut off. Right answer? Good. I'll give you. There'll be a break, so you'll have more time. So right now, just like take a picture right now. So next one. Audio goes to the warehouse and check if inventory is in a sellable condition. Existence. So yeah, if you want to put your answer now, that'll be very interesting. On the chat, you can put in the chat if you want. This warehouse and checks if inventory is in a sellable. Is the existence on price and obligation valuation cutoff? Okay. What circumstances will likely not result in fewer tests of inventory? Well organized client inventory will place in the warehouse. You feel pressure by the client, nature of the inventory items being low risk, strong supervision of the count, a second counting of inventory that is independently reconciled with the first count. And four, which of the following is responsible for contributing to the public's confidence in the financial reporting process in Canada by promoting effective regulation and independent high-quality auditing? CPAP, PCOB, CPA Canada. The most persuasive form of evidence is A, gathered internally by the client, B, or six. Risk of material misstatement is a function of inherent risk and control risk, audit risk, detection risk only, information risk. Okay, I'll let you guys read that. Just gonna plug my laptop in time. Okay, next one. Tracing is the most appropriate for testing existence, occurrence, completeness, accuracy, cutoff. Wait, is that the same as oh yeah, it's the same one, right? Yeah, sorry. This one. With income statement accounts, evidence is more persuasive if there's a sample from the entire period under audit, closest to the end of the fiscal year, at least 3 months of the fiscal year, December, since this will include large holiday sales. You're auditing accounts payable and you're conducting inquiries. Which of the following people you will not be talking to? Company ABC went public in 2021 and it's not listed on the TSC. It was the only major change that affected the company since the prior year. John thinks that the overall materiality used in the 2021 audit will be lower than overall materiality used in. Did someone say something?
What?
Did someone ask something?
What's
No.
your Mateo called?
Victoria, Victoria, I think you're on. I'll mute you.
Sorry.
Okay. Okay. The next one. Only concern. Company ABC is a small company and is a low risk audit. The only concern that you have is inventory, which consists of very unusual items, which makes it difficult to determine their value. What are you likely to do in this situation? Increase PM, increase OM, use inventory as a base for calculating materiality. None of the above. Okay, so that's the questions that are very like that you could get on a quiz. The format is similar, and so now you're like I also want to give you like a mindset. So like let's say you're doing an audit and discover fraud. Like what's going to happen to you as you're auditing a company. There's fraud. What's going on? What are you going to do? This is more for like the midterm. Scenario two, the client blocks your company's documents. So what's happening? What are you going to do? Then scenario three, you find a mistake below materiality. Again, what's your next step? Scenario four, you find a mistake right below materiality. What are you going to do? And lastly, like the company is acting sus. What are you going to do? What are the steps and like what are the audit procedures? What's the audit program? I want you to reflect on like these questions and be like, okay, I'm gonna have to do that. So now I'm gonna look at the question. So iPhone 6 says, do you think reading the textbook will be helpful for this class? I know that the problems will be since Alex said that he might take some questions from it, but reading, yeah, so I'm honestly like I have the textbooks, I never read it. The only thing that you want to do is that let's say you look at the slides, you don't understand something, and then you go in the books and then you control F and then you find it. But there's no need of like reading the whole book because like it's just a waste of time. If you want to like study efficiently, it's all about you look at the questions and then you look in the book for the information. But don't be like, oh, okay, chapter six. Um, I'm going to be looking at it the whole chapter. Or like if like what I would do is like I would look at the slides before I have a class and I would see if I would understand anything, everything. If there's something I would not understand, I would go in the book. I'll be like, what is this? And then if I didn't understand it, I would just when the teacher would go through the slide, I would question him. That's it. But don't read the book. It's way too long for nothing. Oh, good. So how do we feel about all those questions? Are we like, if the quiz was today, I could do it, or like, Jesus Christ, I need help. Which one is it? Or is it in the between? In between, in between. Okay, I need help. Need more practice. Okay, good, good. So I'll start with the slides. The theory. Jesus Christ. Okay, Brandon, I got you. This one. Brandon, you need to chill. So I also uploaded new slides and updated versions. So I did a little corrections to them. Wait, let me see where my slides are. Yeah. And then we're gonna do flash over inside. Okay, been too yeah, been too focused on 340. Yeah, 340 is a tough nut to crack. Okay, so if you have any questions, just like you could unmute yourself and ask, like, or put in the chat, no problem. Okay, so the demand for audit and other assurance. So we'll see that the companies, they need assurance. Then what do? They go to the big four, big eight, all these companies, auditing companies, and they find you, auditor. And as an auditor, you need to do some auditing work, and it will be a lot based on materiality. Based on materiality, you're going to be identifying a lot of evidence or small evidence, and you're all doing this for information risk, which we'll see afterwards. So assurance engagement. So assurance engagement is just you're expressing a conclusion to the consumer in respect to a criteria. So this criteria could be either ASPE or IFRS. So guys, let me know, what is the difference between IFRS and ASPE? Like why would I choose IFRS or ASPE? Someone wants to volunteer?
One is for public companies, the other one is for private companies.
Yes, exactly. So that's the big difference between both. And what are the levels of assurance? You could have reasonable, so that's a high level of assurance, and then there's a limited assurance, which is a negative assurance. So like let's say I'm on the crime scene, and then I'm a reporter, and there's just a suspect that's like a male, 5'10", with the hoodie, and then I ask someone, and they tell me, no, I have not seen this individual on the crime scene. That's reasonable. That's with a high level of assurance. If the person tells me, I did not see anything, that's limited assurance. And could someone tell me why there's reasonable or limited assurance? Because like it looks like we would always want to have a high level of assurance, right? Someone wants to answer?
Yeah. Oh,
Yeah. Yes. iPhone 6. What's your name? Jesus guys. Okay, so I'm gonna answer myself. So the reason is because of the it's because of the cost, right? And the time. So some companies, if like you're a big company like Apple, well, your users want to have a high level of assurance. But let's say you're a small company, you might not have the fees to pay a high assurance. So that's why you would only have like a limited assurance, and sometimes that's only what you need. Yeah, so what is the difference between these two in terms of audit work? Yeah, so reasonable, when you have a high level of assurance, you're doing more audit procedures. So you're gonna be maybe having a different level of materiality. And what type of work has absolute assurance? Because no worries. Okay, so what type of work has absolute assurance? Is that possible to have absolute
Not
assurance?
possible.
Exactly. So it's not possible. And why is it not possible? Because you're an auditor, you're human, you can make mistakes, and you can never be 100% sure. And is there a type of work that has no assurance? Put in the chat, yes or no. Can you have a type of work from accounting that has no assurance? Maybe. iPhone 6 says maybe. It's actually, yeah, you could have type of work that has no assurance, which is like, let's say just I'm compiling all the data, the information that has no assurance. So that's just an accounting work. And the service is valued because audit is independent and perceived to be unbiased. And probably your teacher talked about a lot on perceived to be unbiased, because that's the thing that makes it kind of like independent. And the fact that you're perceived is to be. If you don't, if you're not perceived, then it's worth like poo poo, like it's not worth anything. Okay, so what are the criteria for insurance engagement? So three-party relationship, so that's you, the auditor with the client, and the company you're auditing the books, and the users. Subject matter, criteria, gathering sufficient appropriate evidence, SAAE, expression of opinion or conclusion. So SAAE, that's very important. Jack Martin, he would be like saying this word like 3 times a class, and that was one of my midterm, one of my quiz questions, like sufficient appropriate audit evidence. So remember that. Okay, so you see the dynamic between the three parties, the client, auditor, and then the external users. So it's weird because look, the client actually hires the auditor, and then the auditor they provide to the external users, but at the same time, the auditor has to look at the books of the client. And so you're like, if there's no independence, then it's easy to be like, oh well, I'm going to choose the auditor that I want because he's going to give me some favorable um uh let's say he's going to help me out to maybe cheat or something to provide to help me with my bias. And so we'll see after that why is that actually fine right now, because there's a wall between the client itself. Okay, I'm not sure if you understand what I'm saying right now, but we'll see, and it'll be more specific later. Okay, so as an auditor, yeah, so you must issue an opinion that you're reasonably certain that there are no material misstatement due to error first. So again, reasonably certain, not absolute. And what are the qualities of an auditor? You have to be competent, independent. Yeah. So what is the auditor's report? Yeah, so it's you have to report, and then against a criteria. Ask the IFRS, like Patrick said before. Opinion is an assessment, both free from material misstatement, material. Yeah. So this, I would memorize these words for the midterm. Okay, so if they're asked you like, what's an audit report? Like these are the words that you have to say. These are the key points that they're looking for. Okay, auditing. So auditing is just that you're looking at the financial statements, seeing if the numbers are fine or do they seem accurate. Then what's the difference between accounting and auditing? So accounting is that you're just piling up all the financial statements. Auditing is you're really looking at the numbers. And then what are some types of audits? You have financial statement audits. So that's what you're doing at a big four, all the looking at private public companies. Compliance audit. So this is like, let's say there's a loan of $50,000 that the government gives you, but you have to hire like 10 employees in Quebec. Well, you could hire a firm, an accounting firm, an auditing firm, to look at if you actually did that. And then operational audit, that's like more for the government. If let's say there's 10,000 people that works for the government, are they actually effective at their job, or they're just there and not doing it because like they're government employees? Okay, so materiality. So this is a very, very important part of Acco 360. And so when you're thinking of materiality, don't think of like how risky a company is. Don't be like, oh well, this company um has like very, very low materiality, and low materiality is bad. Because this company is at risk. No. If you say that, you get 0 points. You have to say, look, this company has low materiality because we are thinking about the users, the investors, the bank, and suppliers. And let's say we're talking about a loan. Well, this is very material for the bank because there's covenants. And how would that change the user decision? So you have to look at the dollar amount. If it's a big amount, then that's very material. Or if it does break, it's a small amount, but it breaks a loan covenant, again, that's material. So not high or low risk. And it's all about how would this information change the user's decision. And it can be qualitative and quantitative. And even if you're omitting something, right, that is material. Decisions that the users can make that could be changed if there's a large material error. And Yeah, so you're thinking like, let's say a company wants to invest in another company, how could this certain element impact the fact that am I going to invest or not in this company as a client or as a bank or a supplier or even the landlord? So like landlord could be like, let's say a company, can't pay, it's dead. Well, I don't want them to be in my location because they're at the default of risk. And then we're all at the end of the day, we're trying to find evidence. And when you're going to be working 40, 50 hours a week, at one point you'll be like, Jesus Christ, I just want to get, the lowest amount of evidence, but with the like most reasonable assurance possible. So work less and then do things that are smarter. So that's what you want. And you could have different types of evidence. So high would be anything that's like written, and low evidence would be like if you're just talking to the client, because like you can't record anything, it's worth nothing. So is iPhone 6 asks, is materiality proof? It's not proof, because what proof would be evidence? That's your proof. Materiality is like let's say you're trying to get how much proof. Yeah, that's it. So materiality is how much proof are you gonna get? Are you gonna get a big amount or a small amount? And it depends if it's material or not. Is that good? Yeah.
Yeah.
Okay, perfect. So wait, just tell me your name first, because I don't want to be saying iPhone 6 the whole time.
Yeah, it's Kevin. Hi.
Oh, Kevin. Okay, sounds good, Kevin. Perfect. All right. So must obtain sufficient quantity of evidence to satisfy the purpose of audit. Yeah. So there's information risk. So that's why you guys are here. You're hired. You're being paid the big bucks to fight information risk. And there's different types of information risk. So like remoteness of information. It could be like, let's say the owners of the company are away. They're not like at the company every day, 24 hours on 24. Bias and motives of the provider. So let's say I'm a manager, the CEO. Well, if I have stock options that are tied to my financial performance, then I'm gonna have to I'm gonna like more inclined to have higher sales right now. So there's a lot of like build and hold, like stuff like that, where you could do like accounting gimmicky to have like high numbers right now, even if you didn't actually sell the product. Voluminous data, so it could be like a bunch of transactions, like millions of transactions. Like how could you deal with this problem? Or complex exchange transaction. It's like let's say the company has like a big structure, like they're all over the world. Well, it could be hard to like look at every piece of a transaction. And how you can reduce information risk. Well, the users of the financial statements verify the information themselves. So that's usually what the CRA does. So they'll be like, oh yeah, send me your documents to prove this, yada yada. But like it's only them that could do that. Users share information risk with the management. So let's say you buy a car, and then you say, look, if I'll pay you like $1,000, but if anything happens, like I want you to fix my car. So you're kind of like there's like that you're sharing with management, like the person that sells you, the risk. But the most common thing is auditing can reduce information risk associated with financial statement uh, is auditing, right? So the independence, and also what you have to do is the issuance of the report to say, does it meet all the criteria, and do you have a modified or unmodified opinion? Any question for chapter 1? Are good? You're good? All right. So let's go to public accounting profession and audit quality. So who's responsible for the financial statements? So financial statements is 100% the management, the CEO, the CFO. They're gonna want like, it's their house. They have to make sure that it's clean and that it's working efficiently. If it's not, well, they can't just be saying like, oh well, it's the internal control department's error. No, they have to find maybe consultants to improve their process. And when we're talking about internal controls, we're looking at the design and the operations. And management actually they have to sign a letter to the auditors that says that, oh well, all my internal and all my internal system is working fine and working fine. And if there's anything, they're liable for it. And if a manager does not provide management with unlimited access, that's when you give a scope violation, a qualified report. That's what we call it. So like you don't give an opinion because you're saying like he doesn't even want to give me access to his door, so you can't do anything. And usually like let's say they want a bank loan and they get a scope violation. Well, the bank's not going to give them the money, so that's why they should give you access to everything. So I have a question here from Kevin. Is materially the first step to collect evidence similar to prosecutor where they need to dig up? Is materially the first? So it's not the first step. Materiality is not, it's like when you're deep in the trenches, then you start looking at materiality. The first thing that you want, and I'll go through them, is like you're looking at the risk. Like where could it go wrong? And then materiality is really like a specific number from, let's say, one account that you're gonna get. Like maybe for the AR, we're gonna be looking like low materiality, and maybe for accounts payable, we have high materiality. Okay, so that's just like a number to get it, but like it's not the first. I'm not gonna be looking at company and say, oh, what's the materiality? No, I'm gonna be looking like where there could be fraud, where there could be mistakes, and then let's say I do find an account, I'll be like, oh, well, this one has low materiality or not. Is that good, Kevin?
Yep.
Okay. So yeah. So what is quality control? So this is like when you're at a big firm, like what do they expect? So like tone at the top, ethics line, independence, human resource. Like these are all the things that if you start working, they'll have you like onboarding for like 1 week and like give you all the spiel of like how they're a great company and because of all these things, but like yeah, you don't really read them. For the quiz, like it's more common sense than anything else at this point. What are the auditor's personal responsibilities? Professional responsibility, education, get that CPA, compliance with ethical and independence requirement, integrity, right? Be sure that you're not like taking money or stuff like that. Professional skepticism and professional judgment. So always questioning. So even if you do get a document, be like, is this document fine? Is there a way that they could cheat us? Stuff like that. Conflict of interest and like independence. So conflict of interest is something that's very broad. So let's say um, uh, the auditor has some stake in the company that he's auditing, right? So that's a conflict of interest. Independence is really just the bias. So these two terms could be like interchanged easily, but the difference is that it's conflict of interest is something that's very broad. Independence is like very specific to giving an unbiased opinion. And then you have the planning, determining applying material. So adequate applying and supervision, then determining and applying material levels. So Kevin, this is like the second step. So first you just look at an overview picture, and then you're looking like where's the risk, and then after that you're looking at, oh yeah, specific account, what's the materiality for this account, and then you assess the risk of material misstatement, obtaining sufficient and appropriate evidence, and then you report as an auditor. Okay, so CPAP. Reason I have a slide on this is because there's always a question on CPAP, either on your quiz or your midterm. But like, the question is, who polices the police? Well, in this case, it's the CPAP that police the accountants. And what they could do is they could ring at your bell at a big four, at let's say PwC, and be like, you, and you. I want to see your last audit, and they're going to be checking if you're compliant with all the CAS standards. So that's who CPAP is. And here we refer to standard as CAS in Canada. And so in Canada, like the rules of accounting are more like it's more like use your best judgment, while in the US is like it's more by the book, it's more strict. So here you could like have more space to argue. Yes. Are we good for that? Any questions? No? Yes? Maybe?
All good.
Okay, Kevin's good. Let's see what time is it? 10:41. Okay. Audit responsibilities and objectives. So you'll see like different parties, they all have different responsibilities. And we want to know these responsibilities because like let's say there's a problem, there's fraud. Who are we going to associate this mistake to or this error to? Who's going to be liable? And that's why as an auditor, you have to always have that professional judgment and skepticism and like Jack Martin says, like trust but verify. And then you also have to know all the judgment traps that you could be making, and then that will influence your audit process. And then within your audit process, you're gonna have to check the management with your management assertions. So management responsibilities. So again, we talked about this. Prepare the financial statements. They have to put a fair representation and adopt sound and appropriate accounting policies. So that's what they're doing in the financial statements. That could be great. But if you're not sure, you got to ask them. And that's where you use your professional skepticism. And implement adequate internal controls, access to all info that is relevant to the preparation of audit. Again, we talked about this. You got to give them access. Management has to give them access. Otherwise, it's a scope violation. Okay, so corporate governance. So I just guys, tell me, why is there corporate governance? Like, what's the difference between the board of directors versus the actual management, like CEO, CFO? Like, why are we paying these people? And if you want to know like how much these people are paid, like I could tell you like Dollarama, like they have like I was looking at the financial statements and there's like 10 people on the board of directors. They have 6 meetings a year. Each meeting they're paid like I think it was what $10,000 to $20,000 for like one day. It's crazy. So why do we need to have these people? Like, what are they doing? Someone tell me.
I guess it's because they are the mind management of the company, so they are the quote unquote the big guys, I guess.
Yeah. So what would be their job, Kevin? What do you think their job would be? Like, what's like in one sentence? What are they doing? They make the decision. Yes. Okay. So Patsy. So they make the decisions about what? About the day-to-day business or what exactly? Why they pay the big money?
The future of the business, I guess.
Almost there.
Okay.
Almost there.
They have a plan in place. They hire the manager in store so they can manage the people, and the people on top are like they see the short term, medium term, and the long term, the future of the
Yes.
company.
That's good. So, Kevin, you said it with the fancy. So they make decisions regarding management. So they're the bosses of the CEO, the CFO. They're the ones that's supposed to be representing the stakeholders. So if the CEO or CFO are not doing their job, management has to fire them, or they'll be like, "Oh, well, you can't do that." They have to be overlooking them. And these BOD normally they're people that have like lots and lots of like experience from like working in multiple businesses. They're like 50, 60 years old, and they have a reputation to be like the best. That's why they're paid the big money. And if they're not doing their job, it's on them. So they have to make sure that management is actually performing, or they're not doing anything sus. And they're representing the users. And within the BOD, there's the audit committee. So these are the people that are like CPAs, and if there's any like fraud, the auditor would go to them because they understand the accounting frameworks. Yeah, and they also choose which auditing company to go with, like Deloitte, the PwC, and the two others, EY and KP. Yeah, so they're not. Yeah, so they're not responsible for doing the financial statement. That's management. They'll be supervised, independent, like an external auditor. Exactly. Any questions? This is very important. Okay, so for 360, 465, you have to know this. Any questions? No? All good? Perfect. Okay, so auditor's responsibility. We've been through this. Provide reasonable, not absolute assurance that financial statements are free from material statements and presented fairly. Right, so free from material statements and according to what? ASPE or IFRS. So these are the two things I want you to write in the midterm. And they also have to look at laws and regulation. So is there any contingent liabilities that the company might face? Or even going concerns? This is good for CPAs. So like, let's say you're gonna look at the situation and be like, oh, well, there's a problem there, problem there. Well, at the end of the day, will that impact the going concern? Will the company might go bankrupt in 1 year or 2 years? Because if you don't say that, well, you could be liable. They could come to you, the user, like the user, the shareholders, and be like, well, you should have told me this. So that's an important issue. And what's the difference between material versus immaterial misstatements? Others are responsible for detecting material misstatements for a reasonable person, right? So reasonable person could be like any users. So the bank, the supplier, so it has to fit anyone that could read the financial statements. And when we're talking about materiality, like even if there's a small error there, could be fine, but if there's a lot of small errors together, right, that's material. And so error versus fraud. So the difference is really just if it's intentional or not. So an error is unintentional. So you have an intern doing something. Am I considered to? Yeah, Kevin. A reasonable person could be like, let's say you own Apple stock. Well, you're a reasonable person because like you should have as much access as the other people. So just always depending on the context. So let's say it's a small company and they have like 2 shareholders. Well, that's the reasonable person, not maybe like one individual, but maybe like 2 like private equity firms, right? So that's always the difference. So now going back to error versus fraud, yeah, so error is intentional, it's unintentional, and when you're doing a fraud, it has to be intentional. And the reason why fraud is hard to find is because since it's intentional, well, these people are trying to hide it, so it's hard to detect. And like, let's say you're someone that wants to fraud the company. Well, if the police finds out, well, what do? You pretend that you're dumb. So then it becomes unintentional. It's an error, right? You play dumb, but that's just a way to see it. Misappropriation of asset. So there's 2 types of of, uh, of fraud. So like one that's MA. That's when people are just stealing from the company, like small stuff. And fraudulent financial reporting is done by mostly by management. And the only difference between these two is that when it's MA, it's a small amount, but it's very repetitive, right? When it's fraudulent financial reporting, it could be like 1 time a year, but this number is massive compared to like all the small stolen stuff of assets. All right. Okay, what is the role of an external auditor regarding fraud? So fraud is management's responsibility. Let me ask you this. As an auditor, are you responsible for any type of fraud? Put in the chat. Yes or
No.
No? So Kevin, what are you responsible for?
Shit, I had an answer in my head, now it's lost. But
So
because wait, you're not responsible, because if you're responsible, you kind of lost the unbiased part of being an auditor. So that's why, I guess.
well, no, you still no, because unbiased would be meaning like you have like stake in something else. But now we're just talking about fraud itself. Yeah, sorry, Elizabeth, you raised your hand.
Yeah, so because the client is oftentimes providing us the auditors, the financial statements, if it's financial statement fraud, then it's often very hard to detect. And then sort of the misappropriations of assets is often like you said, small amounts. So it wouldn't necessarily affect materiality, or we wouldn't look into it because it wouldn't, let's say, skew the decision of the users.
Okay, that's very good. And like, what level of fraud are you like responsible for, would you say?
Maybe identifying if there are weak internal controls that could lead to potential
Mhm.
fraud.
Yeah. Okay. So I'm trying to get to an answer, but it's very complicated the way I'm questioning it. But like, you're just responsible for fraud that is material again. So based on the material level that you have, then you're gonna be assessing if there's if there's high fraud or not. But like, let's say, um, you could ask this. I think Jack Martin had an example where he would ask his client at one point, like, were you responsible? Are you responsible for any fraud? And the client said yes. And then he was shocked. And it was because the client would go to golf and then claim it as like a business expense or something like that, which is like maybe $5,000. But the company was worth maybe like 100 million. And so is that fraud? Yes. But like $5,000 on like $100 million company is not material. You're just responsible for a fraud that is material and that could actually impact the the decision of the users. So that's what Kevin and Elizabeth are trying to say. And so it's just it has to be material. Yeah, 5K for, maybe it was a 5K was five for the whole year membership, right? So actually 5K, yeah, that's pretty decent. But yeah, so just try that as material and that could impact the user's decisions. Try, yeah. So what is professional judgment and skepticism? So professional judgment is to the author knowledge and experience, meeting gap. Is there enough evidence for the decision? Consider the impact of financial statements. Professional skepticism, just verify. So that was one of my questions in the quiz. Like, what did Ronald Reagan say? No, is it Ronald Reagan? No, sorry, Jeff Kennedy at the Berlin Wall. Did he talk about that, Jack Martin?
Yeah, it is Ronald Reagan to
Okay, Ronald
Gorbachev.
Reagan.
Yeah,
Okay,
to Gorbachev.
okay, good, because he did put that in my quiz. I still remember till this day. It's been like a year and a half. So guys, remember this: trust but verify. Okay, and then awareness of the judgment traps and biases. Okay, so you got 4 types. So you probably saw this in another class too. So confirmation bias. So that's your belief, overconfidence bias. It's when you as a person has like you think you have more knowledge, so like you take for granted a document or something. And anchoring is like when you're referring to last year, so Sally, same as last year. And availability is like you don't have much information on your hands right now or because of time. Okay, so what is the audit process? So as an auditor, you're expected to like plan before your audit, and you want SAE, sufficient appropriate audit evidence, and then you don't want to be working too much. You just want enough evidence for it to be material enough. So you have to plan. And first step is a risk assessment. So you're going to be looking at uh, first of all, well, client and continuance. Can you manage this client? Are they too big for you or not? Audit planning. knob, right? You have to understand the business to really see the risk itself. And then you assess the risk of material misstatement. Kevin, there's where you come in with materiality. So at the financial statement level, at the account level, and at the assertion level. So you start big, then you go deeper, and then you go deeper. And then you have a risk response. You're gonna look at the strategy that you're gonna be taking, and then within that, there's the scope, timing, and direction of audit. Try to gather all the evidence, and then you conclude. And then lastly, you report: is it an unmodified or is it a modified opinion? Good. Okay, so what are the types of management assertions? So there's for transactions and account balance. And guys, please study this, okay? So if there's one thing that you want to go and read in the book, this is what you want to go read in the book. Make sure that you know your assertions, know for transaction balance, practice, because it's going to come up for 316 midterm and final, right? So the exam is like 60-80% cumulative. So if you do well in your midterm, you're probably do well on your final as well. And on your quiz, there's probably going to be like, I don't know, like 3% of the questions on assertions. So you better know them now. Okay, so occurrence, recorded transactions exist. So I put here a couple of examples. If you're not too sure, just memorize them. And then when you're at the quiz or the midterm, be like, oh, well, this one looks like this one that I saw for occurrence. So take a look at that. And I also have like a little, so this is for balance, existence, completeness. Notice that for there's no existence for transactions, so be wary of that. Okay. So I put an example of transactions, how you could find it from a sell amount of 144K. And really the like difference between occurrence and completeness. This occurrence, you're vouching. Okay, so you're going from the books to the record, and then from completeness, it's the opposite. You're tracing, so you're tracing it back. So you're going from the record to the book. Yeah, sorry. Book record, yeah. So here there's a little. Yeah, it's not as good, sorry. Yeah, so book to record, supporting documents, and here from supporting documents to the book and record. So that's the completeness. And sometimes, like I'm telling you this, it sounds easy, but like when you're gonna look at the examples, it's actually be like, holy shit, like, is it occurrence, is it completeness? So really make sure that you're saying like, oh well, this is a supporting document, this is a bank record, and are we going back? Are we tracing back, or are we like vouching? So this is for balance. I put another example. Okay, so this is the tips and tricks. So you're gonna look at the question. First of all, are we testing a dollar amount? If it's a dollar amount, I want you to put accuracy. If we're assessing AFDA or for valuing merchandise, that's evaluation. Okay. And then for completeness tracing, if we're forgetting something, then that's completeness. And if we're going from the supporting documents to the books, right, we're tracing back. So that's completeness. And let's say I have invoice number 1, 2, 5, 6, 7. If we're missing invoice number 4, what is that? That's an omission. So that's completeness. Then we have occurrence. Again, from the books, supporting documents. Let's say we have a bunch of invoices. Then we have invoice number 5 twice. Then we're looking at occurrence. Okay. Did it actually occur or not? This is transaction number 5. So that's the difference between these two. And existence would be look at subsequent cash received from AR balance. We would look after, see if an amount include exist or not, but on the balance side, not the transactions. Okay, so this is like a little cheat sheet that I have if you're ever confused. Okay, so yeah, I think we have to go through this too. So audit evidence, this is our goal, getting audit evidence. But before getting that, we need to work a little bit. We need to do some steps in order to get this information. And so audit program, we're going to look at the audit program. So that's, as an auditor, you got to plan this. And then within your audit program, you have a bunch of audit procedures. And these procedures could be general from multiple accounts, or it could be very specific to only one account. And then with all of that, again, what you want to get is audit evidence. And then lastly, you're going to form an auditor's opinion. So audit program is detailed instructions of the entire collection of evidence of the audit procedures for an audit area. So that's everything. That's all the steps. And then audit procedure is like, let's say I wanna look at the accounts receivable for any like fraudulent transaction. Well, how am I gonna do that? And then you say like, to test occurrence during the interim audit report, obtain cash disbursement report, and for an outstanding checks, compare the payee name, yada yada yada. So this is more for your midterm, and it's like, let's say they ask you like, there's a problem with a certain account. What's your audit procedure? So this is a structure I want you to put to get as most points, because when you're gonna be graded, there's a rubric, right? It says, does the student ask you, did the student put like the why, the when, the how? The more information that you put, the more points you could get. So the audit program versus the audit procedure. So audit procedure, again, is very specific, while the audit program is general. So trying to answer what is going to be the extent of my audit procedure. So like, what are the steps I'm going to be taking to find this evidence? How exactly am I going to be doing it? Why is the procedure being done? Why is it being done? Okay, audit program is larger. Yeah, so it could be, other programs could be for the inventory cycles, right? Inventory cycles could touch many accounts. So that's very the overview picture. Okay, so what are the general types of audit procedures? You look at the risk overall, the big picture, where errors could occur, and then you look at the test of control. So this test and control substantive procedures, like I'll just give you like a little sample of what it is, but like for the later on chapters, you'll see this a lot more. So test of controls is really just, is it designed and operating effectively? Okay, you're looking at the system of the company. If they have, like, let's say they have to make the manager sign any contracts above 50K, are they actually doing it? And substantive procedure is when you're getting dirty, you know, you're looking at all the documents, you're seeing that you're testing for all the assertions, you're looking at all the small accounts, and this is a lot of time. So what you want as an auditor is that the company has good test of controls. Then after that, you don't need to do much work. But if the test of controls are ass, okay, well, you can't really rely on them. So you're gonna have to take every freaking transactions and double check them. So that's the big difference. And you also always look at test of controls first, because that's where you could save time. If they're bad, then you have to go all hands with your gloves and be like, I gotta do this from scratch. All right. So these are the ways to collect evidence. I would remember this for your midterm. So how to collect evidence, there's different ways. There's inspection. So you look at yourself, there's internal versus external documents. Internal documents are within the company, external could be like from banks, like bank statements, and then from there you could do vouching and vouching, tracing, to look at the documents. There's observations. You just go there and look at how the employees are functioning. External confirmation. Yeah, so you could ask Costco if they owe you money. If Costco owes the client that you're auditing money, then they'll be like, yes, they owe me 50K, or it could be like, oh yeah, I owe them 50K of revenue at the same time. There's recalculation. You could redo all the math and reperformance. So this, again, don't forget, this is the non-math part. So you're looking at internal controls. Like again, if you're looking at the managers, do they have to sign any checks about 50K? Maybe you're gonna create a fake 50K sales invoice, and then in 1 week look at if the manager signed it or not. Analytical procedures. You look at estimations. We're going to see this afterwards. And inquiry, you're just talking with the client. Okay, analytical procedures. There's 4 types. You could do the industry data. So you're looking at comps, comparative analysis. Similar prior period data. So that could be like 1 year ago, 2 years ago. Does it deviate from the number that they had for the past years? Client determined expected results. It could be like, okay, so sir, how much do you think it is? And then when you're arriving at a conclusion, maybe it's a similar amount. Auditor determined expected results. So you could also have your own thoughts and be like, oh, well, I think it's going to be 100K, and then actually do the calculation if you have information on the industry itself. Okay, so timing of designing analytical procedures in audit planning, doing the risk response, doing the completion of the audit. And so the conclusion is that honestly, like I'm not gonna go too much into this because like these are more theory questions. Are it's more for the midterm, the nature, extent, time. They talk about that in the book, but I don't really use it, to be honest. 3 key decisions about what evidence to gather and how much evidence to accumulate. So just if you want a template, you could try to find the nature, the extent, and the timing. And what you want from audit evidence is you want it to be persuasive. Okay, so there's appropriate, sufficient, timely, and relevance. Because you don't have all the time that you have to do an audit, and you can't have access to everything at the same time. So you really want to have that balance to just get enough evidence that is par to the materiality level that you're looking for. And then that's a combined effect, high quality evidence, and then sufficientness, appropriateness, and timeliness in the context of the risk of material misstatement for the audit objective. So really a balance. So I'm not gonna be so Fazzy asked if I'm gonna put it on Facebook. No, I'm gonna put it on YouTube just because I think the specs are better. And also because like I want it to be shared. You don't need to be in the Facebook group, so it'll be on the YouTube channel. Yeah, so right now, yeah, I'll share. Well, it's actually on it right now. If you look at past the link for the Facebook for the YouTube link is there on the Facebook page. But when I'll post it, I'll make an announcement and I'll put another link. But if you just write like Danny Lam Acco 360, well, you're probably gonna find me. So yeah, so that's why at the beginning I highlighted the differences from last semesters and this semesters, because like if you're watching those videos, there's some modification that you have to do. And yeah, I'll upload it. Yeah, I think it's that. Yeah, like and subscribe. No, just kidding. But yeah, so it's gonna be on YouTube, and you could just watch it beforehand. So it'll be easy for if you have one day before your quiz, you rewatch it. The stuff that right now I'm saying and you're not understanding because like we're Sunday morning and you probably maybe partied too much last night. Yeah, no problem. Okay, so auditor's responsibilities. Evidence obtained by the auditor. It could be physical examination, observation, reperformance, and that's very reliable evidence that you do it yourself as an auditor, better than any sources. Independence of source, confirmation. So again, you can confirm with banks, with suppliers, if the client actually owes or should receive an amount. Qualification of a source, right? So let's say you're looking at contingent liabilities. You want to have a reputable law firm. And then qualification of source. Yeah, so even like, let's say actuarial companies as well, that could be counted as there. Consistency from multiple sources. So like, let's say you ask the CEO something, and then you ask the CFO, are they answering the same thing or completely different? And so if they do have different answers, you're like, yeah, maybe I'm going to lower materiality. And then the effectiveness of the client's internal control. Again, that you're going to be looking at it. If they're bad, then you're gonna have to go substantive on them. Substantive means a lot of work, and you don't want that. And then degrees of objectivity. You gotta be objective, not subjective. Okay, so what is unmodified or modified opinion? Opinion auditor is saying that they're reasonably certain that there are no material misstatement. The documentation. Yeah, don't forget to document. So unmodified is good, modified is bad. Okay. This chapter 6, I don't think it's in your. It's
not. It's just chapters 1, 2, 4, and 5.
2, 4, right? Okay. So maybe, well, it's not that long. So I'll just go to, what time is it? I'll check. I'll go briefly. And for like the next, actually, I'm gonna skip it. It's pretty tight on time. I'll just put it on the next. Yeah, it's not too important, honestly. Yeah, it's not too important. No, you know what? I'm gonna do it. Okay. So client's acceptance, and I think I'm gonna forget it next time, so I'll just do it now. So you're gonna do the planning to enable audit to obtain sufficient appropriate audit evidence, main objective. Right, so before taking any clients, you want to make sure that one, your team can handle it. Two, let's say the resources, can you actually make money out of it? And let's say you have the Hells Angels that wants to approach you and give you an engagement. You'll be like, yeah, but if I do take your engagement, like, don't, like, is my reputation being on the line as well? And you want to be looking at the client itself. Like, let's say the Hells Angel come to you and be like, what happened to your last auditor? Why are you changing? Is it a you problem, or was it their problem? So you want to make sure of that. And that's where the engagement risk comes. And looking at targeting financial material mistake after the audit. And then you're looking at the risk of material misstatement as well. So we'll look more into this in the future. So risk of material misstatement is the inherent risk and the control risk. So you're looking at the inherent risk, what could happen outside of the company, and then the control risk, which is inside of the company. So the risk of material misstatement that Kevin has alluded to is the outside, everything that's external, and then control risk, which is everything that's internal the company, and then you're gonna assess it. And then you're gonna have an overall audit strategy plan. You're gonna select the staff. You're gonna look for outside specialists. So let's say you're dealing with a jewelry company. Well, you might need an appraiser, or let's say it's IT company. You might need someone specialized in IT. If like whether internal audit work can contribute. Again, your test of controls, reliance on other auditors. So let's say you're looking at a client that just changed hands. It's your new client. Can you take the work of the past auditors? So risk assessment, you have to understand the nature of the client's business environment. So NOB, we're missing an N here. Knowledge of business, not COPE. Industry, regulatory, and external environment. And so let's say you look at the mining industry, it's a lot more dangerous, it has more risk to, let's say, bakery, right? So you have to know that organizational structure and ownership, if the company spans into multiple like countries, business model, how do they make your money, risk assessment. Yeah, so you look at the client objective and strategies. Do they have a reliable financial reporting? Is it effective? And does it comply with laws and regulations? Again, we talked about this auditor's responsibility like for the 5th time. It's also that comes back and again. And this is important. So this is your materiality, how you could find it. Right now, you just need to know like what is materiality and what are like the factors that influence them. You don't need to calculate it. In the midterm, they'll be like find the materiality, and this is like the whole process that you're gonna have to do. But just for now, like there's 2 things, right? It's the quantitative and the qualitative. So quantitative, the percentage you have to take. These are the ones that you can take from, and the qualitative, it's what will make the materiality go up or down. Are we good for materiality, or is it so confusing? Okay, so I'll just I was doing tutorials for the past year, and a lot of people like were confused on that, so I'll just go back. So like, look, okay, think of it this way, okay? Just so you don't confuse, because if you do confuse this in the midterm, like you will lose a lot of points. So this is a trick. So let's say it is both, right? If you think that the company is fine, well, your materiality will be high. So hence the first line here. Material is high. So do you get more fish or less fish than if it's very low in the deep sea? You get a little bit of fish. So that's all the evidence. The fish are the material, the evidence that you're taking. If the company is bad, damn, a lot of risk. Users, we got to think about the users. So we're gonna get more evidence. So we're gonna have lower line, and then we're gonna get more fish. So that's more evidence. So the lower the evidence you have, the lower the materiality, the more evidence that you get, and that's how you should think about it. All good? Any questions? Okay, and then after that, there's performance materiality. So this is when you want to have like that cushion. Okay, that cushion. If there's things that you're not too sure about, the company is a bit sus, then maybe you have performance materiality. And I have another. I think I put in the drive in Excel with every like performance materiality, like what would make it increase or decrease. But this is really like your cushion. Okay, then you have specific materiality, toggle open statements, and then you have true or amounts. Okay, but really what you have to make sure you know is the materiality and the PM. Any questions? Okay, so we'll come back at 11:30. I'll let you guys do all the questions that we did at the beginning that we saw, and then we're gonna come back and then we're gonna answer them. And so hopefully you'll get the right answer. Does anyone have to go see the questions or miss one of the questions or didn't have time to see?
Oh, yes, I missed number 5 and number 9.
Yep.
If you could show those
Okay,
again, please.
sure. Number 5?
Yeah, thank you.
And number 9.
Thank you.
Anyone else? All good? Okay, we'll come back at 11:30. Go stretch, go eat, and we'll come back. I'm back. Fadzi, I just saw your. I'll go back to 10. Q10. Very good, everyone. You ready? Yeah. So I want you to put. You can either tell me the answer if you think you know it, or you could just put in the chat. I'll make it a little bit fun. All right. Let's go. So what do you guys think the answer for number 1 is? So what do you guys think the answer is? A. Patrick says completeness. Elizabeth says B. Okay, so it's either A, B, or B. Okay, we got a lot more B's. Okay, so why you guys? Okay, I'll ask Patrick. Why do you think it's A?
I just realized my mistake. Yeah, I realized it.
Maybe you're right. Maybe you're right. But
No, I know I'm wrong
well, okay. Why do you think you're wrong? Tell me.
because you're going from the record directly to the books. So usually, wait, yeah, I don't remember.
So you see, it's very confusing because like, what's the books? What's the records? So, like, you're auditing a company's December financial statement, or auditing the client's AR at that date. You examine your client's bank records for a job. So what you're going from the financial ledger, the ledger from the AR to the bank records, right? To the supporting documents, right? So that's why that's what would be occurrence, right? You're vouching. Okay, are we good for that? Yeah. Okay, no questions. Okay, next one. So what do we think the answer is? Mm, B. We're getting a lot of B. B. Okay. I'll ask Ben. Ben, why do you think it's B? Putting you on the spot.
Me? Why I think
Yes,
it's
you,
B?
Ben. Yeah.
Okay.
B for
I
B
mean,
for Ben.
I was initially gonna say I think it's D because in this question it says that he goes to look at inventory to see if it's in sellable condition. So he goes to see if the value is if the value that the client is saying the inventory has actually has that value. If they would have said in the question, the auditor is going to the warehouse to see if that inventory actually exists and to look at the value, then I would have put B. But it was kind of like I was in between B and D because when an auditor goes to the warehouse, he's normally looking for existence and valuation.
So you're sticking with B or D?
I'll say, I'll say D. I'll stick with D.
Is D?
Yeah. Okay, it's B.
Because
Okay.
you're actually looking for is it there, and then after that, can you evaluate it, the amount? Because you would go to the warehouse to make sure that it's there. Otherwise, you would just be looking at maybe just the statements, right? So you're actually taking all the time to make sure that one is in the warehouse, and number two is it the value is in the one that they're telling you, or is it only iPhones 8s that they have in their inventory and they have to impair it? Manish, you have a question?
Yes, I don't understand why it's valuation too.
So valuation is just in the sellable conditions. So let's say you have food in your inventory, and let's say that the cans is like broken. Is someone gonna buy it? Not really. It could be like the day has passed for the food, so you have to throw it out. So that's why you have to look at valuation. If on the balance sheet the inventory is it worth as much as it is in real life?
Okay, thank you.
No problem. Okay, let's look at the other question. So that, yeah, so here I put this in the drive because like you have the quantity. That's when you're talking about an inventory. There's a quantity and the value, so the valuation, and then you're looking at the quantity in existence. Is it actually there or not? Is it on the site or not?
So in the past question, even if they like, no matter what, if the auditor goes to the warehouse, it's always going to be he's looking for existence. No
Well,
matter,
depends.
even if they say in the question that he's not specifically going there to see if the inventory exists.
You just guys usually like the auditor would have to go to an inventory to see if it exists or not,
Yeah.
right? Otherwise, you're just doing all this work for nothing. And if you do like a internship at one of the big fours, like sometimes there's inventory counts, and they
Yeah.
actually bring the auditor in the inventory to go check everything.
Yeah. Okay.
Good,
Yeah.
perfect. So number 3. So what do we think? Okay, Elizabeth says E. Brianna says B. Ben says B. Okay, so Elizabeth, let me ask you this: why do you think it's E?
I totally just realized I misread the question. What circumstances will likely not result in fewer tests? So that there will be more tests of the inventory, correct?
What circumstances will likely not result in fewer? Will not result like what will make it that the inventory is fine?
That the inventory is oh, okay, so then maybe I did answer correctly. I figured that if we're doing a second counting of the inventory that's independent, then the auditors would think that, you know, that information, since it's two separate counts, would be strong information versus versus the other. Even if the inventory is low risk, I mean, you still need to have a count.
Sorry, I mean, will likely not result. So which one will make it that the inventory is like it's bad, like there's a mistake or something like that? So which one is the outlier in all of these ones?
Feeling pressure by the client.
Yeah, so like let's say you're feeling pressure by the client, because if we look at a well-organized client inventory well placed in the warehouse, well, you're probably not going to recount it. Inventory will be easy for you to count it. See, nature of the inventory items being low risk, right? So it'll be easy to evaluate. Strong supervision of the count. So if you have a manager that does inventory counts, every day for the past year, then probably they know how to do it in every single warehouse. And E, a second counting of an inventory that is independently reconciled with the first one. So that, as you said, is good. Right?
Okay,
So
got it.
the only thing
Okay,
that would
I read it too fast. Yeah, that makes sense.
Yeah, exactly. So like if you your quiz, like even I read it too fast, but like when your quiz, like even you have like 5 minutes left, guys, go over it because like your teacher will trick you. So be sure to like reread the question, and then be like, use your professional skepticism. That's what I want to say. Yeah, do that for every questions. Feel pressure by client. Okay, number 4. So what's the answer? I should know this. I should know. I talked about it. I talked about it. A. Elizabeth says A is A. Karina says A. Perfect. Yeah, the CPAP. Sorry, it was answer for. Okay. Oh, so the answer for 3 was B, feel pressure by the client. Because like if you're feeling pressure by the client, let's say they're on your neck when you're doing the inventory, well, you might not do a good count. You might have to redo your count. So the opposite of fewer tests of inventory. Okay. So the answer for 4 is A, yeah. So we've been through that. That's pretty easy. 5. The most persuasive form of evidence is what's the most persuasive form of evidence, guys? C, B, C, C. Okay, Brianna, I'll put you on the spot. Why do you think it's B?
Because you're receiving like external confirmation, which is usually like more reliable than getting like internal confirmation of like balances and stuff, or like evidence generated by the client.
Very good. But what about the second part and provided by the client?
I don't know.
Yeah, so the best documents are, as you said, from externally, but here in this case, it's internally as well, because like they have the document, the clients inside had the document. So do you think the answer is still B?
So maybe it'll be D because like all three are technically coming from the client, so they could have been like altered, I guess you could say. So I would say maybe go with D, all of the above.
Okay, so here the question is, what is the most persuasive form of evidence out of all these three?
I don't know.
So you think that all these are equally persuasive, right?
Well, aren't they all three coming from the client?
So let's look at the first one. So evidence gathered internally by the client, right? So that's by the client. B, provided by the client. And C, response to an account receivable confirmation received by the author. So in C, is the client able to like sneak their way into this statement?
I guess I would see.
Exactly. Good answer. So C, and so everything is more persuasive when it's externally or the client cannot touch it. Good, everyone? Perfect. C. I think this is the same. Yeah, this is the same question as beforehand. Just that it's more precise. So I'll just skip this occurrence. The risk of material misstatement is a function of. So I mentioned this a little bit at the end, if you were listening. Can you explain why C is correct? Yeah. So the reason why C is correct is because here we're looking at the most persuasive form of evidence, so the best form of evidence. And when we're looking at the best form, it's anything that the client did not touch or that's written usually. But here A, it was generated by the client, so that's not good. And B, so prepared by an external expert, that's good, but then was provided by the client, so that's bad. And C, the client did not touch it. So remember that. Okay, so this is useful for your CPA classes as well. Always think about bias. So your client wants to have nice numbers. So if it's generated by them, well, they have a bias to show something good. B, evidence prepared by an external expert. So they're the one that chose the expert. So maybe it's friends. So that's the bias that they would just choose someone that would give them a good number or a good fair market value. And C, account receivable confirmation received by the auditor. That's the one that the client doesn't touch. Is it good, Karina?
Yeah, it's good. Thank you.
Thank you, Karina. Okay, so 6, we'll skip that. This 7. So what do you think the answer is? You're not sure? Okay, Patrick says B. Anyone has another answer different than Patrick? No? Okay, so Patrick, why do you think it's B?
I believe it's B because if there's a material misstatement, there might be some fraud. So that's why I'm saying for control risk and inherent risk is if there's material misstatement, there's a risk for the user of those financial statements that they're not right. So that's why I'm saying it's B.
Okay, so you did get the answer. The explanation is not 100% the right, but yeah, you're right on B. And because inherent risk is like everything that's outside the company, control risk inside the company. So yeah, you do that have that fraud part, but like sometimes fraud is not always like within. So that you gotta be careful with that. But yeah, so risk of material misstatement equals inherent risk and control risk. So these are the two elements I would either have big risk of material misstatement or low risk of material misstatement. Okay, very nice, Patrick. Okay, so 8. You guys should get this. B, B, B. Okay, yeah, so everyone says B. It's good anchoring bias because you're looking at past history where you're like, oh, well, since she didn't make any mistakes before, then what are the chances of her making a chance now, which should be very low. So that's your anchoring bias. Okay,
Sorry,
tracing is the most. Sorry?
what would be an example of a confirmation bias?
It's like you're confirming because usually confirmation bias is more your belief. Here you could see like, oh yeah, the belief that she's doing a good job, but like usually a belief is like, let's say on yourself, your values and stuff like that. This is not really values. This is more like you're looking at her past performance and saying that her past performance is good, so this year should be fine. So let's say confirmation bias would be like, oh, I'm on Twitter and let's say I love conspiracies and they say that COVID was made from a lab, genetically made from a lab. Well, that's my bias, my values is that, oh well, I think of conspiracy theories, yada yada. So like it's more about your values, and here it's more anchoring because it's on something of the company, like the person, performance, right?
Yep. Okay.
Yep. Okay, so tracing is the most appropriate for testing what? Yeah. Perfect. C, yeah. So again, make sure that you know this for your quiz and you don't forget it. And then you don't panic during your quiz and be like, what's completeness, what's tracing, what's vouching, what's occurrence. Make sure that you know that. But the income statement accounts evidence is more persuasive if there's a sample from entire period, at least 3 months of the fiscal year. Okay. Brianna went from C to A. Everyone says A. So why, Brianna, are you sticking to C or A finally?
C was for the previous question. I
Oh,
believe.
previous, okay. So
Yeah.
okay, so you right now it's A, right?
Yeah, it's
Okay.
A.
And what do you think it's A?
Because
Brianna?
it's for the income statement, it's like for the entire like period that's like that the income statement is covering. So you have to make sure you gather evidence from like the entire period, so that way you make sure like the whole income statement is correct and not like a specific month, you know?
Exactly. So if the question was balance sheet, which answer would it be?
At like closer to like the balance sheet date.
So would it be A, B? Okay, so which one would it be?
B.
Yeah, B. Okay, great, great, great. Yes. So Kevin says balance sheet as of a date and income statement it's for the whole year. Excellent, Kevin. You're auditing accounts payable and you're conducting inquiries. Which of the following people you will not be talking to? Controller, accounting manager, purchasing manager. D. Brianna says D. 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 Exactly. Okay, so this was a bit harder. So guys, go ahead. So what do we think here? Patrick says D. Neither statement, one or two. One or two. Interesting. Do we have another answer? C. Kevin says C. Okay. So Kevin, let me ask you this. Why do you think it's C?
Not too sure, honestly. Maybe because of the recency, I guess.
So why? So the recency. Okay, so the recency makes it go down, right? Lower.
Yeah.
Why? Why lower?
I mean, maybe the method should be used like example, if 2021, you should use the materiality that has been used in 2021 and not used in 2020 because 2020 always only 1 year apart. It's kind of still quote unquote old materiality.
Yeah. Okay. And Patrick, why do you think it's neither statement one or two?
Well, I think the due to the fact that it's now listed publicly, more people will be able to make like investments, so they're going to have to be a little more accurate than the previous year where they weren't on the stock exchange, and the perform as so as everything else would have to be more everything would have to be more accurate. That's why my reasoning.
Okay. So here in the case, tell me, Patrick, what is materiality? Like, what would be materiality here? Is it a
Materiality
number?
would
Is
be
it
the
what is
the
it?
materiality would be the amount or a certain amount that would impact the decisions on for shareholders.
Exactly. So you think that the fact there's an IPO that it makes this number more accurate, right?
Well, I believe they'll need to be more accurate due to the fact that now more people are going to be involved in that company due to it being public.
So would that number change or not?
Yes.
Okay. So it would change, right?
Yeah, that's it'll change.
So that's what John is trying to say, no? That the materiality will change. And Mary thinks that the PM will change as well.
But isn't the audit overall materiality not the same thing as performance materiality?
It's different. It's different. It's a bit different.
Okay.
Yeah. But
That I
usually
don't know.
usually when your materiality change, you would change a bit your PM. So Patrick, you're right on, except a little you had the right thought. But Kevin said a little bit more right. So the fact that the company is IPOing, there's more investors, there's more people coming in. And so when you're looking at materiality, it's a change from 1 year to the other. If something changes dramatically, then you have to change your materiality. Okay. And here, when you're thinking about materiality, it's all about the users. So before it was a company that maybe had 2 investors, but now they're on the TSE. So that means that you could have thousands, 2,000 investors. And so that's why for the users, you would need to change. And is there a dollar amount of value? Yeah, because like let's say this company goes on the stock exchange and gets funding of 500 million when they were like a $50 million company. So that's why like your materiality would change. And it's more since you have to make sure that the numbers are fine, not for just 2 users, but a bunch of users. As an auditor, you might have to lower the materiality. And in that case, you would want to have a cushion. So you would put a PM, performance materiality, just to make sure that everything's fine. So the answer would be C, both statements 1 and 2 are true. Okay. Are we good for that? Yeah. So think of it as the the image of the boat, right? So before we just need to find a decent amount of evidence, but now since it's a big company and we got to really make sure of our stuff, we're gonna lower our thing and get more evidence, just because we have a much more users now. So think of the users when you think of materiality and the value dollars. Good? Okay, let's move on to the next one. 13. The concern that you have is inventory, which consists of very unusual items. Which so what's the answer for this? What's the answer, guys? Someone wants to try? Are they expected to sell the inventory? Yeah, well, if they're a company, they're expected to sell the products, right? But that's not the question. It's about materiality here. Increase or lower their materiality, or none? Come on, guys, I want an answer. Okay, Patrick says C. Use inventory as a base for calculating materiality. Okay. Okay, so in the list, in the PowerPoints, I don't think inventory is part of the quantitative. There's like sales revenues, there's like assets, but like when you're talking about assets, it would be more for like everything, not just like inventory, So that's why C would not be the answer. But for A, okay, so Kevin says A. Okay, so look, I'll say the answer, and it's none of the above. Because when you're looking at materiality, you're looking at one, the change from last week to the other, but here, like, there's no change. 2, you're looking at the users. Here, is there more users or no? No, it doesn't change. Here, you're talking about maybe the dollar amount, but that's not as material as like the user. We're not talking about like millions from like $100,000 to millions, right? And so you would do none of the above. You would just change your audit procedures, right? You might call in for an appraiser, right? So it's more about the audit procedures that you will do, not the materiality. Good? Okay. So that was the last question. So you're doing an audit and you discover fraud. So what do you do? Someone tell me. Try.
You report it to the audit committee?
Yeah. So you report it to the audit committee, and usually when there's fraud, you don't get involved. You talk with the forensic. So I think Jack Martin is part of the forensic team. He's like a partner at forensic teams in at KP. So they would take care of that. You wouldn't touch it. You get away from it. Okay, so the client blocks you from his documents. What do you do? Kevin, let me ask you this. Kevin, you still there? It looks like he's not there. Ben, I'll ask you this.
Yeah, well, depending on what he blocks you from, like if he blocks you from too much document, then you just can't do the audit because he's not providing enough information.
Exactly. And what is that called? You remember? Something violation.
No, that I can't. I forgot the exact term.
Okay, it's called a.
It's called a scope violation.
There you go. There you go. So you have a scope violation, and at that point you would have a unmodified and modified opinion.
Modified.
Modified opinion. Yeah, exactly. So you can't do anything because he's not letting you show your documents. Okay, so if you find a mistake below materiality, let me ask you, was it Elizabeth? Yeah, Elizabeth. What are you
Yeah.
gonna do?
If you find a mistake below materiality, you don't have to tell your client to re-report or to restate the financials, but to just keep tabs to make sure that if there are other unmaterial misstatements that they don't equate to a material misstatement.
Yeah, so you just ignore it because it's below materiality. And so, as you were saying, if you find a mistake, right? Sorry, no. If you find a mistake below materiality, you don't care. But let's say you find a mistake right below materiality. What would you do? Would you ignore it or no, Elizabeth? So let's say your materiality is like 1 million, and you find out like a transaction that
That's
had an
like
error.
900,000. Yeah.
Yeah,
something
yeah.
like that. I would just maybe keep an eye on it and see if there are other misstatements like this that then would equate to, let's say you find another one that's 500,000, then your whole amount becomes over 1 million.
Okay. Is there a technical word that you could use that if you put this in an exam, you get all your points? The technical word. Yeah. You would use
Oh, not recalculate. Would it be recalculation? No, I guess it's a completely different
it's
thing.
something materiality.
Uh,
For
performance.
performance
I have no
materiality.
idea.
Exactly. So
Okay, performance materiality. Okay,
that's how you would
I
use it
haven't
in
read
the.
chapter 6 yet, but that's good to know.
Okay.
Okay, so
But this is
performance
more for your
materiality,
midterm.
got
But
it.
like, I just
Okay.
want you guys to understand like when would I use performance materiality. So like, let's say the number is like 999 and it's 1,000.
Yep.
Then I would be like, you know what? Now it's the time to use your performance or your PM. Exactly. Your cushion.
Okay.
Just to make sure that it's not like you didn't miss anything. Right? And so let's say scenario 5, the company is acting sus, and then at one point you did some work, you did 50% of the work, and then you find out that the FBI just raided them and they have an ongoing investigation. What do you do? Ben, what do you think you're gonna do? You just continue or what's going on?
If the company is acting sus,
So you already done 50% of the work.
yeah.
You always suspected that they were sus, and then at one point the FBI comes and they raid them. They look for documents, and they have an ongoing investigation.
Well, I would stop the audit because at the end of the day, you know, if the audit, like, if something goes wrong, it's your reputation and the auditor's ruined. So I would call off the audit.
Yeah,
the
so you
sales.
would stop it, right?
Yeah.
Exactly. And that's a good answer because remember that when you did your planning, this was not part of your planning, that they had an FBI investigation. So your materiality was another number. But now, with all this going on, it changed. Everything changes. And as soon as it changes, you have to change as well. So the numbers will be different. And here, maybe you'll be like, I'm not taking this engagement, or I'm going to be redoing this engagement, but I'm going to be doing all the work again. Right. So what was the answer for scenario 4, please? Yeah. So for scenario 4, if you find a mistake right below materiality, so like let's say materiality is like 1,000 and you find out 999, you wouldn't say, oh, well, it's below materiality, so it's fine. No, you'd be like, oh, well, I'm going to be using performance materiality, which is like 50 to 75% of your materiality. So it would be like $750. And since 999 is above the 750, then you would have to take the 999 and do some work on it and be like, is this fine? Is this not fine? And stuff like that. Okay. All good? Maria, perfect. Okay, so now we have like what? I have 53 more minutes with you guys. Yeah, Elizabeth, you put your thumbs up. Okay, perfect. Thank you. Good, good, good. I think we're gonna do a little bit of the exercises. We're probably not gonna have time to finish everything. I'll just put the solution in the drive afterwards. So I'm just gonna go through as most stuff that we could, because like these are probably questions that you saw in class, but like let's say you missed a class and you didn't have access to the teacher's explanation, so that's why I'm here for. Okay. So give me 2 seconds, I'll get some water, I'll be right back. Okay. So let's start with question part A. You guys did this in class, right?
Yep.
Yeah. Okay. So maybe just like tell me like what you retained from it, from question A. Let's say Ben, go ahead.
Yeah, just one second, let me read it.
Yeah.
If I remember well, isn't it that they provide like an independent opinion?
Yeah. So they want to make the link between, let's say you're an auditor and then there's a company you have to audit them, what kind of information you're helping them with. And in this case, it's the consumer unions. So they report cars. Like what do they do for the users? So they wanted you to draw a parallel between both. So the similar is that they have to improve the quality of information for the decision makers. So they're pros at evaluating cars. And so let's say if they say that an Audi A8 is a bad car for these type of reasons, well, they're giving the assurance that this car is not good. Or if a car is like Toyota Corolla, who's reliable, they're giving users, the people that are reading the magazine, the same thing, the same type of assurance. So, like in one sentence, it would be like they they improve the quality of information for users. So, like this is what I want you to retain. Okay. So usually in audit, you have like banks or suppliers or investors. In here, you have the people reading the magazines and that are actually going to be driving the car itself. And so the reason why you want consumer union here is to reduce the what guys in for what is it information.
Alright. Information risk or bias?
Yes, exactly. So that's why you guys are being paid the big money to reduce information risk through audits. Okay. All good. So next question. What characteristics do you think a reliable consumer evaluation service would have? So what are the three things that we're looking for in an auditor?
Independence.
Yes. Thank you, Patrick. It's not the right color. Independence. Yeah. What else? What else, guys? CPA. What's the CPA? They're very competence, right? When you're paying them, it's because you know they've been through undergrad, they're grad, and then they pass the CP so that they're competent enough to make the decision. And what else? And this is a bit like independence. It's
Integrity.
integrity, yeah. So that's kind of a bit incompetence, but integrity is a good answer as well. But there's one answer I'm looking for, and I say like this is good for not only your undergrad but for your grad. Always look at it in a different way. So it starts with a B. Your bias. So that you want someone with free of bias. So remember when I told you about manager always want to have like high revenue? Well, do you trust them with the audit. Hell no, because they're gonna have to put some nice numbers. So you want someone that's free of bias, though still has like no stake, which is a bit like independence, right? So here it's more about independence of opinion, and here free of bias is more like their motivation. Okay, so that's what you have to look at. Okay, so what other incentives a fresher might cause consumer union not to perform its responsibility? Let's see. Karina, you want to answer this? Are you gonna pretend you're not gonna hear me? No, I see your mic. You want to try it?
1 second, let me see. Let me read it.
Guys, just remember that there's no like wrong answer. This will help you a lot. So like this is a safe zone. Don't worry about it if you get it wrong. So like let's say you're an auditor, Sharina, and you're trying to do the best job possible, but what could influence that from you doing a great job to uh uh like mid job?
Um,
How about like what would cause you like stress, you know? Like you gotta do something,
I
but
guess
like if you have a mandate.
I mean, having like all the like having lack of access to information.
Yeah. So lack of access that would be one, but like one of
I
the
just read that from the chat.
okay, there's oh yeah, I'm gonna open the chat. Yeah, we got that. Yeah, so lack of access to information. Um, yeah, that could be so that would be more on the uh let's say economic like so let's say like resources. You don't have all the resources at hand, and that's why like when you do the audit planning before, you want to make sure that you have enough staff, you have all the information needed. Do the clients give you access to it? Like let's say I put economic pressure. Karina, what do you think? What could be an economic pressure?
Um, economic pressure. Like, do you mean like from the client or just like
As an
or
auditor, as an
as an
auditor,
auditor?
yeah, like your boss like
Yeah,
giving you
like
economic.
time.
So
My boss kind of
beautiful time and
well, I was gonna say
maybe
resources, but I mean it's already there. Um, like enough people on your team.
yeah,
Like
so that would be resource, but very good. But usually, time is a big factor, or like money wise, right? So in this case, they have to test the cars. What happens if they don't have enough people? What happens if like testing a car costs too much? You got to ship the car to them, then you got to ship it back, and let's say they don't have every car on site, so they have to take an old car or something like that. So time and money would be a big one, and then lastly, social pressure. Social pressure would be, for example, let's say a company, in this case, you don't know, but let's say the article is sponsored by other vehicle company. Well, they might be pressured to put some good reviews for their sponsors. Hence, the independence or bias is not the correct here. So that's the social pressure. Okay, good.
wait, sorry, can you explain that like the social pressure again?
Yeah, so let's say the consumer union, they're sponsored by for their ads by the car companies. Okay, so they're more likely to put a good review for them to get their sponsorship. Or like let's say they diss on Audi and then the sponsor is like tires that are affiliated with Audi. So the social pressure would be to put a good note for Audi, or let's say it could be pressure from like a merger or something, and you don't want to be the one that said like, no, we're not going with this merger, and then all the companies are like, oh well, why did you not go with it, or stuff like that. So that's the social pressure that could be given like from the population or from the sponsorship people in this case.
Thank
Does
you.
that answer you?
Yeah.
Yeah, but just think of it like social pressure as like your sponsorship.
Yeah. Okay.
How do you get revenue, and like how would that impact the revenue that you get? Yep.
Yeah.
Okay, so required E, compare the concept of information risk by the shareholder of Toyota when using the financial statements with the financial risk faced by a buyer of Toyota automobile. Now, I don't think you guys did this in class, though, so we'll do this. So compare. Yeah, so like if you're looking at here, you could see that the information risk is about the same. So from a Toyota user, or from like a company that audits a firm, here the consumer union is the one that's supposed to reduce the information risk. So both the shareholder and the buyer of Toyota, right? They're looking at the information given by the person in charge of doing the audit. Make it. And the problem is that if they're basing their their knowledge on these reports, and if these reports are not good, or if there's bias, then that's the problem. Okay, so required F. I don't think I'll do this. I don't think it's really important for the quiz, but I'll put in the solution. But there's a maybe just understand them. So remoteness of information. So just notice. Right, so the remoteness of information info. So yeah, remoteness of info, remoteness of info. So the fact that the CEO and CFO are far from the company itself or the users, well, that's something that you needed an auditing party to correct that, to reduce the length, the distance between them, right? So bias of provider. Why is it I've never seen this in the exam? Bias of provider, volumes data, and then complex transactions. Transaction. Okay. It's not too important. Okay, I don't think I'll do G. It's a bit redundant. Okay, so this is more important. Question 2. Maybe I'll ask Elizabeth to answer the required A for me, please.
Yeah, sure. I'm just gonna read it. Okay, so the main objective of the audit of an entity's financial statements is to give reasonable assurance to the users of the financial statements that those financial statements were prepared, relatively correctly. If there are misstatements that need to be noted, there are notes made on in financial statements.
Financial
Yeah, free of material misstatement.
Are free from. There's one more thing I'm looking for. Yeah, you're 2 on 3.
Reasonable assurance, free
One
from
more
material
thing.
misstatement. Pardon?
There's one more thing I'm looking for in this answer.
Uh,
And I asked Patrick in the beginning of the class of the tutorial.
hold on, let me look at my notes.
Gotcha. I'll give it in.
But they're independent. Yeah, independent and perceived unbiased. No, never mind. I don't
Can
think
I jump
that's.
in?
Yeah, go ahead, Ben.
Isn't that
Pop up.
according?
Oh,
And it's in accordance with IFRS or ASPE or the
Yes. There you go. There. So this is very important. Always against something, right? And even in your CPA classes, you'll be like, this is yada yada based on IFRS 16, ASPE 32, So always against a framework, accounting framework. So we could put like IFRS ASPE. You're very good, guys. Right, so the audit represents the CPA's firm's guarantee about the accuracy of the financial statements, right? So that's an easy question. Is that no? There's never a guarantee. Guarantee. Right. So the objective is to give something that is presented fairly. Okay. Okay, question C. Is the auditor's primary responsibility to detect all kinds of fraud at the client? Sorry, Liz asked a question in 12:20. Sorry, I didn't see that, Liz. Yeah, I don't think it's relevant anymore. Sorry. So yeah, isn't the auditor's primary responsibility to detect all kinds of fraud at the client? Yes or no?
no, it would be impossible.
No. And
Only
until
material fraud.
there you go. Beautiful. You took my own words. There you go. Blue. Yeah, given that the CPA firm is auditing financial statements, why would it need to understand anything about the client's business?
We need to understand it to see if they were able to, where fraud would be possible, where material fraud possible, to see where the highest risks for the company are.
So you must look at this. Must assess it. So, right? So and OB. So what's this, guys? Knob. I talk about it.
Isn't it knowledge of the business? No.
Mhm.
Knowledge. Oh, yes. Knowledge of the
Yes,
business.
that's knowledge of business. So like when you're doing your primary observation at first glance, you have to know your knowledge of business, because if you want to understand the numbers, you must understand the business, which means like the industry, how it operates, how the company itself is functioning, all the controls. So that's why. What does the auditor do in an audit other than verify the mathematical accuracy of the numbers in the final statements?
Verify if they're presented in the accordance to accounting standards.
What else? In terms of work, like in terms of audit work, what do you have to check as well in accordance to their accounting standards? Because we talked about evidence, right? This is all evidence. What do we want in terms of evidence? Do we want a lot of evidence, low evidence? What's the sweet spot?
Sufficient.
Yeah, so what's the four-letter word that Jack Martin loves? And that was on my quiz as well.
I can't tell. I'm not in this class.
Okay, you're trash.
I don't know a four-letter word, but it's trust is verified. No, oh, shoot.
So that's more like for professional skepticism that it's just verified. But Brianna said it. It's sufficient appropriate audit evidence, right? So SAA. This is what we want to verify, that we have enough for our mandate. Beautiful, beautiful. Okay. So according to the CPAP and audit firm cultures, okay, so I'll just go quick. An audit firm culture that maintains the appropriate balance between commercialism and professionalism. So it's just that you, as a firm, you want balance, okay? So if you put too much effort on commercialism, like getting more clients, yada yada, then you're like getting the Hell's Angels, even if they'll boost your revenue, well, it'll might hurt your reputation. So you also have to put work on the quality of your audits. So choosing good clients, but also like making sure you have a good team and like have reviews on them and stuff like that. So it would be just balanced. What type of quality controls can audit firms put in place to ensure that partners and staff maintain that appropriate balance? Or these are HR questions. Like you'll see the answer, but like it's just it's more about uh, common sense. So like this was a slide on it. So like professional evaluation, quality review, and stuff like that. Okay. Okay, chapter 4. Okay, I'll let you guys read this. So it's a bit redundant, but like what's their job, their responsibility? Like in one sentence. Can someone tell me? Of financial statements. Yeah. So free from material misstatement. But what's free from material statement? Your financial statements. Yeah, so FS. Right? But like they're material statements, but like they're one job. Okay, it's to. Geez, okay, I have a French keyboard. That's why. Sorry. Oh, I should have an English keyboard. English United States. Okay, let me see. There you go. So free from material statement, but it's expressing an opinion. And opinion for the user to reduce their information risk. That's their job. Within all the criteria, yada yada. But this is what they're here for. Is there the okay? Fraud and other irregularities. Okay. So I did ask this question, I think. Oh yeah, Liliana said express an opinion. Yeah, that's exactly what I was looking for. What are the responsibilities of the independent auditor for detection of fraud? So, like, if you do find fraud, I did ask this beforehand. So, what do you do? Did I ask this to Ben? Ben.
Yep, you bring it. Well, if you're an auditor, you bring it up to the BOD, basically people or management. It's not really your responsibility.
Exactly. Bring it to the BOD, and then you let Jack Martin, partner at KPMG in forensics, to take care of it. So BOD and move out. Well, yeah, because your responsibility is just trying to detect material management or employee fraud, financial statement fraud. If you do, then you tell it to someone else in another division. Okay. So let me ask you this, guys. Let's say you saw that someone in the team, like a manager, was doing fraud. Who would you report it to right away?
The audit committee.
But the problem is that the audit committee, you need them maybe like once each 2 months, and like maybe this is like it's now, right? There's a fraud now. You got to tell someone. So who would you tell? Would you wait until the meeting and say it? Like, who would you talk to it about?
Would you go see your fraud department just to be sure it's fraud? Like at the end of the day, you don't want to be like assuming it's fraud and it might be something else, because then it just looks bad on you, the auditor.
And let's say it is fraud.
Yeah.
Who would you report it to?
Would it be the the people within KPMG or whatever that take care of fraud?
Yeah, but then you do have a duty to the company, right? Then you have to
Yeah.
report to the company. But who in the company would you report it to?
Upper management.
Yes, there you go, Patrick. You will talk with the CEO and be like, "Are you aware of this fraud from manager XYZ?" But Patrick, what if it's the CEO that commits fraud? Would you report it to the CFO?
Not really, because now it's really on the upper management. So if they were told that we're doing fraud, they would just do everything to cover it up. So now it's really to the board of directors or audit committee.
Exactly. So you would make sure that you would put the board of directors on speed dial, and then you would call them. Because at this point, it's the BOD's like problem if there's fraud, because they're under the supervision of the CEO is under supervision of the BOD, right? And the BOD is your boss, technically. Okay, very good. Question C. What is the independent auditor's proper course of conduct when his or her examination discloses specific circumstances, fraud? So we kind of talk about this. So you can't really trust management anymore. Trust management. And so you would go to either go to either the CEO or BOD. And like, let's say, what's the key word to like when you can't trust management anymore? What's the term used? And then you're doubting this. If you put this in the exam, I'm telling you, you'll get all your points. It's 2 words. Jack Martin loves this word too. And this will impact the work that you're going to be doing in terms of audit. Okay, I'll give you the first word. Management. What's the second? Starts with an I. Someone wants to try? Elizabeth?
Is it incompetence? No, I know that would be too harsh. Can't say that management's incompetence. They're your client.
Yeah, they will not be happy about it. But Patrick, you said this word before.
Oh, really? I don't
Yeah.
remember.
In
Independence? Interference. Integrity.
Yes, there you go. Right, management integrity. Like whenever like these are all the like accounting words that I'm giving you. So like when you put it on your midterm, like that's how like they'll be like, oh, this person knows like what they're talking about, or they're just trying to BS their way into a long answer. Okay, so management integrity. That's whenever you're talking about like you have doubts on them, it's management integrity, the key word. Okay. I don't think I'll go through this. Did anyone have, probably you did this in class. So does anyone have any questions on this? I'll put the answers though, but no, we're good. If you want me, I'll go back to one of the questions if you weren't sure.
If you could just share the answers, we only went over a few of them in class. If you can just, because the teacher won't post the answers this semester, if you can just share the answers for this one, because I know it's the management assertions, and that's important.
Okay. So for this, did he go over the 1, 2, 3, and 4? All
He
these.
did a mix. I can't remember which ones, but he actually, I can look on my notes. But he did a mix of. I think they were just the Shelley or Sherry. He did that one, which is
Okay,
number
this
2.
one. Okay, Sherry, you
Yeah.
did that one. Okay.
And I believe he did the last one as well. Number
Sherry and
Allison.
this.
And Allison. Yeah.
Okay, so the first one, you guys didn't do this. Chen Li.
Of what I can remember, no, not in my class.
Okay. So I'll just maybe explain it.
What are you doing? Tutorial.
Okay. Yeah, so I'll post the answer. But here the problem is that so here Chen Li prior to audit found that this write-off. So this is it. So Chen Li has previously has found the subsequent write-off hospital receivable has closely approximated the amount. So since the amount was similar from the past year, well, she's like, oh, it's fine. So that's an anchoring. So I'll give you the answer. It's anchoring because like you're anchoring your answer from last year. So same Sally, same as last year. So anchoring. That's the answer for here. And for here, the last no, he did Alton, right? So Jackson. Jackson. Uh, so in this case, is the problem is that Jackson like already had like an answer of what he was looking for, and then as soon as something came against his notion, his thoughts, he was like, "No, I'm going to diss it." So this is confirmation bias. So just do this confirmation bias. Okay, so this is important though. I want to be doing this. I think we'll finish up with this. Yeah, assertions. Okay, we got 15 minutes. Let's do this, guys. Okay. So maybe what I'll do is yeah. Okay, examine a sample of duplicate sales invoice to determine whether each one has a shipping document attached to it. So you can put in the chat what you think the answer is. Or you can tell me. So what is this? Occurrence, right? And it's occurrence. It's occurrence because we're going from ledger to, well, the book to the supporting documents, right? Shipping document. We're going to the shipping document. We're vouching. For example, sales transaction selected from the sales journal, verify that the amount of the transaction has been recorded in the correct customer account in the accounts receivable total field of the customer master file. So what is this? Second one. Accuracy. Good, Brianna, right? As soon as there's a dollar amount, boom, accuracy. Jeez. This is, I think this one a bit harder, so let's go with that. Inquire of the clients whether any accounts receivable balance have been pledged as collateral on long-term debtors. Long-term debts, and determine whether all required information is included in the footnote description for long-term debt. So what is this?
The presentation.
Yeah, so which I think this there's more than one answer. So presentation, which of the presentation part would the answer be? Which part of the sentence?
The footnote description.
Yeah, and what about the first part, Patrick? What do you think?
Rights and obligation.
Why would be rights and obligations?
Because if they were pledged as collateral, they have to be presented that way in the financial statements so that they know that if ever something happens, those are the things that go with the. If they can't sell, that's what goes.
Why is it not accuracy and valuation?
Because there's no balance being evaluated.
Good, good. So we're really just looking at the assets as a collateral. So do they actually pertain to it? So rights and obligation, and also presentation.
So Danny, it wouldn't be classification because classifying the assets correctly?
Because we're not trying to classify if, like, let's say
Because
we're
it
not trying
said
to read. Yeah, go ahead.
as long-term debt. That's why I got confused because it said pledged collateral on, oh, I guess it's on the long-term debt.
Okay. Okay, for the
Versus-
second part, the long-term debt.
Yeah.
It's more like how you present it. Classification would be like, let's say in one account, I want to make sure that let's say in the AR, if the amount is either in the 0 to 30 days or 30 to 60 days or stuff like that, is it classified in the right place? Rather here is
Okay,
just
and then
presenting.
And then the rights and obligations over classification because it's pledged as collateral? If there needs to be like a note?
Yeah, so rights and obligations in this case, because we just want to make sure that let's say the accounts receivable, if they're actually there, it's their right and their obligation in case like they default on the debt, like to make sure that it's like their it's the company's accounts receivable.
Okay, makes sense. Thanks.
But usually rights and obligations, it's more for like land and stuff like that. But this one was a tricky one. So every time like pledge as collateral, it's always an asset that's pledged against like the debt. So that's why you need to make sure that the asset is the rights and obligation of the company. Okay. Do you guys hear the background noise or no?
Nope.
No? Okay, good. For a sample of shipping documents selected from shipping records, trace each shipping document to a transaction recorded in the sales journal. This should be easy. Is it occurrence or completeness? Completeness, perfect. Complete. Completeness. Okay. 5. Discuss with credit department personal likelihood of collection of all accounts with a balance greater than 100,000, greater than 90 days as of the year end. So what is this? Valuation. Right, Brianna, very good. Valuation, because we're talking about AFDA. Examine sales invoice for the last 5 years, transactions, recording the sales journal in the current year, examine shipping documents to determine that they're not recording, that they are recording in the correct period. Yeah, Brianna says cut off, right? Because now we're talking about timing. When it's timing, it's cut off. For a sample of customer accounts receivable balance at the year end, examine subsequent cash receipts in the following months to determine whether the customer paid the balance due. Okay, Brianna says occurrence. Is there any other answers? So here, I see why you guys put existence, right? Sorry, occurrence. Because you're looking from like the accounts receivable balance, and then you're going into the subsequent cash receipts. But here, look, it's hard because like I would put occurrence, but also existence, because you want to make sure that the amount is actually there, right? Because then you're looking at the balance, right? Not just a transaction, but you're looking at the balance itself to see if at the year end, all the accounts receivable balance, if they're there in the subsequent cash receipts. Yes, Elizabeth?
Yeah, so my question would be, since we're talking about accounts receivable, it would have to be existence because we're talking about the assertions on the balance sheet. So
Yeah.
existence versus occurrence is basically the same thing, but just a vocabulary change for if you're looking at the income statement or the balance sheet, correct?
Yeah. So let's go back in here. Like one of the questions was like on one of the first questions. You're auditing a company's December 31 financial statement while auditing the client's AR at that date. Accounts receivable, you examine your client's bank records for Jan 20 to determine whether the balance that you're in have been collected. So you see here, like I would put like existence, but this was, look guys, this was actually a question from a quiz. Okay, I'm not gonna tell you how I got it, but as you can see, it's occurrence. And the reason why is because like there's no existence, but like occurrence and existence sometimes can be very similar. But in this case, it was occurrence because there was no existence. But let's say you do have this on a midterm question and it's not multiple choice, then you would need to justify why. So Elizabeth, the way that you justify it, because like you're looking at balance, right? Then then you would be like, oh, I'm comparing at the year end to see if there's an actual amount. That would be existence. But if Brianna says, well, I'm just looking at the transactions and I'm going from let's say from the book to the documents, right? And then you say the book is this in this situation, the shipping documents is this in this situation, then it'll be hard to not give you points. So it could be like the two answers, I would say. All right. So always justify it. Perfect. And that's what Jack Martin told me before, is that you can have multiple answers, just justify it. But in this case, in the quiz, it could be tricky and sometimes they F you up. But it's only 5% for this semester, so don't worry too much about it. Okay, determine whether all risks related to accounts receivable are adequately disclosed. What is that?
Presentation.
Yes, presentation. We're good. Put the sales journal for the month of July and trace posting the general ledger.
Accuracy.
Yeah. So Patrick, what is putting the sales journal?
Recalculating.
Recalculating. Great. So since it's footnote, what is it? Put the cells equals to calculating equals accuracy. Okay. Send letters to a sample of accounts receivable customers to verify whether they have an outstanding balance at the fiscal year end.
Existence.
Yeah. See? Existence. But here it's clear that it's existence because they're not talking about like from the shipping documents to like the books or whatever. So you could take that occurrence out right away. So this would be very much existence. Determine whether long-term receivables and related party receivables are reported separately in the financial statements.
That would be presentation again.
Presentation, but I think here would be more classification, just like Elizabeth mentioned, because like you're not just disclosing stuff, but making sure that the long-term receivables and related party receivables are reported separately, right? So you want to classify it in the right category, but you're also disclosing it. So it would be more in this case classification. So classification, I think of it like more separation of information. Okay, I think my time is due. I'll put the answers for these ones. I want you guys to practice this. But like honestly, like the quiz is 5%, don't sweat it. But like just know your assertions because like it's gonna follow you like everywhere for the midterm, final, maybe like quiz number 2 as well. So like really know them, and like if you learn them now, this you could get a good grade now and get a good grade for the other stuff as well. Is there any questions about Acco 360, about your life? Like right now, there's a bunch of open houses for the big fours. Or like, you have any questions on that? Yeah, just let me know. I'll stay here until my time is due. One more minute. Okay, I'll say a little bit. After if you have any questions, just stay and I'll help you out. All right. So go outside, go breathe some air, go enjoy your Sunday, and have fun.
Thank you.
No problem.
Thank you. Take care.
Then bye, Patrick. Karina, you're welcome. You're Karina, wait. Okay, well, guys, I'll be putting this soon. I'm gonna stop recording, and hopefully you get a good grade. Bye bye. See you next time.